Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, some headlines are asking, is Canada in a recession? And if we are in a recession, how will a falling housing market impact the economy?
Yeah, so I see now the recession talk has been going on now for a couple months. And I encourage all your listeners to go back to the fall of 2016 broadcasts here on House Street, where we first brought this topic to the forefront. And then you can look into 2017, the spring of 2017, when we're telling you that the metrics that they're using to record the economy are so latent that based on our numbers, the inevitability of a recession was already being recorded. Now, I know this week a well-known economist, David Rosenberg, has been out criticizing other economists on the jobs numbers. And I find there's a bit of an irony here, because it always seems like these guys who supposedly call the previous recession are looked to during the current period to see if they can call another one. But from the way that we measure the economy, the way that we know how homeownership wealth drives the entire economy in a country like Canada, these guys are like 2 years too late. So when we're seeing these headlines talking about recession, we're thinking, guys, where were you 2 years ago? Now you're getting negative readings, and only now you're saying a recession is possible. Well, that's sort of like forecasting a housing market without being able to say when it's going to roll over, or forecasting it after housing prices have already started to slide, which universally is what happens in Canada. As you know, Jim, based on, a couple years now of recordings, there's only been one source in Canada for reliable housing market forecast. Someone who forecasted turns in the market months before they happen. There's only been one place where that was available. House Street has recorded it. It's filled on the House Street website. All the old recordings are there. Go back and check them. Now, we weren't on House Street in 2013 when we called Calgary, but luckily there's a CBC interview, if you Google it, Calgary housing market, Ross Kay, where we told the Calgary homeowners in the fall of 2013, don't list your house because the housing market was going to crash. The reason you don't tell someone to list their house is because someone listing their house is generally going to trade up to a more expensive home. Well, why do that when you know housing prices are going to drop? It's just lunacy. Who would buy bank stock today if someone told you tomorrow that stock is going to be worth less money, guaranteed? I don't think anybody would rush out and buy it. They'd wait till the price dropped, then they'd buy it. Well, your home really should be no different. The only exception for your home is when you need a stable environment for a family and you are willing to financially pay extra, meaning if your house price is going to drop, you're willing to absorb that drop for the security that homeownership provides. Security and stability. These economists who are talking, the last couple of months, and then Rosenberg, I think it was early this week. I guess it's Tuesday, so I guess it was yesterday. I think it was the 9th. These guys are all coming to the table too late. The metrics that we use to measure a housing market forecast, as we said in the show, a year and a half to 2 years forward. These metrics are never wrong. We use mortgage origination data. Google mortgage origination data in Canada. Google it. I dare listeners to Google it because it does not exist. CMHC recently has got a little relationship with Equifax, who's claiming to have data available from the last 4 or 5 years. They can't even read their own data correct. Not only do they only have data for the last 3 or 4 years, they can't even read the data that they have correct. I know TransUnion, they're battling this issue right now too. Your economy in a country like Canada is driven by household consumption. In other words, the Canadian savings rate is around 1.5%. So after Canadians are done paying all their bills at the end of the month, including the richest people in the country and the poorest people in the country, we have a savings rate of about 1.5%. So we only have about 1.5% left at the end of the month. So for every $100 we earn, we've got $1.50 left in our pocket. That's it. All the other money is spent. Every single penny is spent. And a large percentage of that money is spent on paying mortgage debt or credit debt, including the interest payable on that debt. So when all that money is being used by regular Canadians, all but $1.50 out of every 100, any kind of change to the amount of money expendable impacts the economy. It impacts the housing market first. Now, what I will tell you is the auto manufacturer market technically runs in about second. So the housing market is rolling ahead about 2 years in advance, and your auto sector will trail it by about a year. Why does that happen? Well, because Canadians are spending 98.5 cents of every dollar they earn. They need to borrow the money to buy a car. You can only borrow the money to buy a car if you can leverage your income. How are you going to leverage your income? Generally speaking, the banks want you to have equity somewhere. Personally, Canadians are not stupid. Canadians are smart people. I don't care what they say about millennials eating avocado toast. I don't care about them saying about boomers staying in their houses too long. I don't care about anything they say about Canadians. My experience with thousands and thousands of families have been Canadians are rational, practical people. When they can no longer borrow money in a manner that they feel is safe, they stop borrowing. They don't trade up to a more expensive home. They don't go and buy the more expensive car. They stretch their own car out longer, or they buy a cheaper model. They start to return home. I'm missing what the term is, Jim, where people start staying at home instead of going out. It's slipped my mind what the common term is.
Cocooning.
Cocooning, there we go. People start cocooning again. So you'll see the savings rate go up. Now, how are you measuring the savings rate? Well, we measure it by looking at the amount of money the average Canadian is paying down in their mortgage every month, plus the amount of money that they're saving. StatsCan doesn't measure it that way. So how should we expect StatsCan to understand how consumption is going to impact the economy, and how much of a leading indicator the ability to access debt is going to be recorded later in latent metrics of the housing market? That insane jobs report, 80,000 jobs in, I think it was July is what StatsCan came out with. That was an absurd number. It doesn't even make logical sense. It would be like saying that the United States of America added 750,000 jobs in 1 month. That's a relative comparison. It's an insane number. Clearly, there's something wrong with their calculation. Clearly, there's something wrong with their methodology. when we're looking around today. And you look at the restaurants are not as busy as what they were. Okay, well, that data is available. You can go check that data. You'll see that the restaurant businesses are no longer increasing the way that they are. They're very close to seeing a downturn. Anything we see that is below inflation, we consider to be a downturn. When I'm saying I'm talking about Roski Realty Consultants. That's how we view things. With housing market, what is a correct? Everybody's going on about Quebec, Montreal, Quebec. Well, in our opinion, for the last 15 months, the Montreal housing market has been correcting. I could sit down, if I wanted to show our IP to government leaders, economists, professors at Canadian universities teaching basic economics. There's no arguing with our metrics. The Montreal, Quebec housing market has been deflating now for 15 months. Yet all you've heard in CMHC, StatsCan, Government of Canada, everybody's reports is that it's the hottest housing market in the country. It's absurd. It's ludicrous. It is a misreading of the data. So what our opinion is this, Jim. Unless this is the first time in Canadian history that housing market metrics have not led the recession by at least 18 months, that will be a first. We recorded the 2007 and 8 period way back in 2005. We're sitting here looking at data. I've got a chart here open it on my monitor right now as we're speaking. This chart shows me 2005 is the downturn in the housing market. We all know what happened 2 years later. I'm looking at the exact same chart for the fall of 2016. The exact same chart. We are now over 2 years into that one, but we would have expected it to be delayed because of the sheer magnitude, the volume of the velocity of the housing market at the time that it turned over. As we've discussed in the show before, tsunamis. You've got all the force of that wave. Even though the wave is already crested, it's already over. There's still all that momentum that has to come out of the market before anybody wakes up and realizes what happened. All these economists are doing, Jim, is waking up and seeing the tsunami pull back out. They are forecasting after the wave has already crashed to the ground and that the receding momentum, the remaining momentum, is finally starting to decline. They are reading markets totally different than how we do. I don't know why. I can't waste my time understanding why. All I know is we're reading these things so far in advance that when we hear someone say, being critical of other economists, missing the read of the data or the analysis, we're saying, sorry, buddy, you were 2 years too late.
Ross, when governments like BC's NDP take on measures that knock house prices down, are they in effect causing a recession?
Yes. You see, this is the problem that you have, Jim. When you go back and let's say you look from the 2008 till the 2017 period. Okay, so before the Toronto housing market officially, the momentum was gone. The market was negative, and all of a sudden, everybody was saying the market was slowed down. What was happening is the government should have allowed these things to take course. The government should have kept their mouths shut. They go in and play with the housing market as if it's the Tinker Toys. You know, the Tinker Toys we had when we were kids. They think they can assemble something, tear it apart, put it back together again, and make it better. And they can't. No government, Jim, should ever institute a policy except in the trough of a housing market. Only during the trough should you institute a new policy, and then you should not touch that policy until the next trough is reached. Politically speaking, you're not going to see a government in Canada do that. We see head fakes, Band-Aids, change of mind almost instantaneously with these people that we elect. And they're making these decisions with the sole purpose of getting reelected. They are not making these decisions because they're the right decision to make. When we're talking to homeowners, so when we're talking to people in groups, we're speaking to them and say, as a family, you're not allowed that freedom. You're not allowed those choices. If you can't pay your bills at the end of the month, you're in big trouble. The banks are going to come after you. If a business does that, they're in big trouble. The banks are going to come after them. The only people that are allowed to do this are politicians. And what is the politician's sole goal? It's to get reelected. The absurdity of what's going on right now with all of the political parties in Canada, from our perspective, listeners have to understand, we're only concerned about homeowners or would-be homeowners. That is the sole purpose of our business. That means we cover 70% of the Canadian public, 70% of the voters. That's who our only concern is about at this stage. And for those people, you look at their options. The Green Party wants to put everybody in Alberta out of work, and they want to come up with, they would rather the world buys its oil from people where they treat women as second-class citizens, or where the citizenry does not have the ability to have oversight of the environmental impact of the production of oil. That is what their solution is. Then we look at the Liberals. What are they doing? They have been buying people off for the last 3 months. If you're on Twitter and you watch what the government corporations have been doing, they have increased their Twitter feeds. The rapidity of their announcements has increased over the last 2 months. That is not a coincidence. They're trying to buy our votes. They're trying to skew the voters' intention. The Conservatives. Well, the Conservatives are not offering any solutions. What are they doing? They're coming out there and they're basically criticizing everybody else. Well, where's your solution? Then we have Maxime Bernier, who the press is trying to frame as a radical right-wing zealot. When you listen to the guy, he doesn't seem to be that different than half of the people you meet on the street each day. Everything is skewed. Everything doesn't make sense. It's talking point. And this is what leads your politicians to do stupid things. Wait till the foreign buyers quit buying in Vancouver and institute a foreign buyer tax. Live with the consequences. The rapidity of house price declines that are a North American record. Single detached homes in Vancouver have dropped more rapidly than anywhere else in history. I can't speak for the Depression. The Depression is the only time I cannot speak. You bring in ideas in Toronto after the housing market has already rolled over. Same thing happened. Massive wealth destruction. Then you have the politicians come in with first-time homebuyer credit, trying to fool young first-time buyers into paying interest rates so high, they're basically 5 times what the going rate is when you look at it from a cost perspective. That's basically what the first-time home buyer plan is. They're basically just charging you, forcing you to lose as much equity as you would have lost by paying a 10-12% interest rate over the 25-year life of your home. You have governments putting laneway houses in. Well, if you densify a neighborhood, it makes it less affordable. There is nowhere in the world where densification has resulted in lower home prices, lower affordability. Nowhere in the world has that ever happened. So why would you think it's going to be any different today? All they're doing is they're patting you on the head, you poor little innocent millennials, you poor mid-life families who would like to have a single detached home. The next generation that's coming along, they're patting you on the head and telling you, don't worry, we're doing something about it. What they're not telling you is, by the time it's going to impact you, affordability will be destroyed further. So, if you want a Tinker-Toy approach to the housing market, don't ask anything of your politicians. Believe everything that they're feeding you. There will be your neighbors who do not believe them, your neighbors who seek alternative facts and data, your neighbors who make rational decisions based on the information that they have, and your neighbors will be the ones who retire wealthy. You're going to still be sitting there, renting your house, listen to the government whine and complain about why they can't make housing more affordable. There is only one answer. Release 300,000 single-detached building lots across Canada each year for the next 5 years. That puts 1.5 million single-detached building lots available for Canadian families. Make sure your immigration rate does not negatively impact that. As a matter of fact, on top of that 300,000 building lots, if you're going to bring in 100,000 families, then you need to kick it up to 400,000. In 5 years, housing affordability is done. Everybody in Canada can afford a house just like they could in the mid-1980s. Everything is rectified. Unless you release those building lots, nothing is going to change. As a matter of fact, they're just tinkering with the market, making things less and less and less affordable, driving house prices higher and higher and higher, forcing Canadians to live in smaller and smaller homes with a smaller and smaller till nothing backyard.
We'll have more with Ross Kay right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, Canada's pension plan managers announced a 1.4% quarter gain in their portfolio this week. They're now stating they're seeking to buy private debt from around the world seeking returns. Is this a safe and wise move?
It's insane, Jim. What planet am I living on? I truly am in planet flat world housing market. Canada Pension Plan has a stated goal, I believe, of around a 3.9% annual rate of return on their investments. That's what their goal is, with zero risk, or as lowest risk possible. To do that, they are using traditional investing techniques that are low risk. They're willing to accept losses in one area to get bigger gains in another, which equalizes itself out at around that 3.9%. They just announced a quarter where they're going to be, it would be a little bit over that if they continue for 4 years. Then they're telling Canadians, hey, what we're doing with the money that you gave us to power your pension is we're going to start lending to private lenders in the United States, China, Yugoslavia, wherever the heck else our analysis think that they can get a return. And we say, are you people really this stupid? Canada has a rental housing deficit. About 20% of the Canadian public that are in renter-occupied homes are in affordability crunch. The quality of home that they are renting for what they're paying each month is being underserving their family. Canada Pension Plan, all they need to do is invest in purpose-built rentals with guaranteed subsidies, long-term, 30 years, secured from the government. It's already Canadians' money that our Canadian pension plan is managing. Why the heck are we not using our own money to generate a return that is zero risk because we're going to back it ourselves? It is the craziest thing, Jim, that I've ever heard of. There is no way that CPP could not build affordable rental housing anywhere in Canada, Vancouver and Toronto included, that they would not get a minimum 6% rate of return with zero risk. Not only that, but that rate of return, or return on equity as we call it, gets lower rental costs for those families seeking to use purpose-built rentals. What you're seeing right now is a very subtle shift in the investor network, the corporate investor, towards purpose-built rentals. If your listeners Google and see just the change the last 6 to 8 months, all of a sudden they're saying, oh, maybe these things are not as bad as we thought they are. Well, guess what, folks? When CMHC is giving away money, if you'll build a purpose-built rental, it's one of the best scams corporate Canada could take advantage of right now. My question is, why is Canada Pension Plan not taking advantage of it? Doesn't it make more sense that the money generations of Canadians have put aside for the retirement is used to house the next generation of Canadians who want to live in a rental property? I think what's missing here is this is a limited opportunity. Canadians will continue to desire to be homeowners. So we are not going to become a nation where 50% of Canadians own homes, unless the government forces that to happen. So let me qualify that. If our governments force us to not be homeowners, then that's possible. But if we're left to our free will, we're going to be a nation of homeowners. That means there is only a limited opportunity for purpose-built rentals. Right now, Canada Pension Plan is turning its back on that. I would tell Canada Pension Plan, I think it's worth $440 billion or something like that. Invest $200 billion in purpose-built rentals in Canada. Secure long-term rental subsidized programs with the government, and have the government even back your loans. The government has lots of protections because they know that the people they're spending the money anyways. They're spending it piecemeal across Canada, which only inflates the cost of these subsidies that are taking place. They're probably double what they really need to be. You can sit down and do some hard numbers, present it to the Canadian public. Hey, this is what the pension plan is going to return. We're going to back it with Canadian tax dollars. CMHC is going to oversee the process, and this is what the return we're going to get. And guess what? It's win, 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 win. Nope. We're going to go up buy American debt. We're going to buy Chinese debt. We're going to buy Yugoslavian debt. That's what they're going to do with our pension plan dollars. While Canadian families seeking to get affordable, purpose-built rentals cannot find it until some smart Canadian corporation looking to scam the government and the public sees the numbers and slips in and takes it away from you.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asks, what are the most important things to know about if you're going to enter the housing market this fall?
The first thing you should know, I guess, is how much is the property you're going to buy deflate in value. That would be the first thing, Jeff. If you're going to be purchasing a property anywhere in Canada today, as of today's date, all house price trends across Canada are not keeping pace. They're all deflating. All housing markets are deflating. I don't care what your local real estate brokers tell you. I don't care what CMHC tells you. I don't care what the government tells you. I don't care what the newspaper tells you. What I'm telling you is, using our metrics, every housing market in Canada is currently deflating. Now, we have a housing bubble index. It measures whether housing prices inflated or deflated in a month. Okay? We are the only people who have this index. The Bank of Canada has no idea what I'm talking about. The reason why we're able to forecast prices is for this reason. We know how housing markets function. Your listeners are looking at a decrease in quality of home at the same time. So this is the problem. This is a real problem right now. Your housing prices are deflating. So you would be buying a home where you're losing money with each passing month that you're going to own it in the beginning years of your ownership. You are also entering the market purchasing a quality of home lower than what you should at this time. Where the exception to this rule would be Alberta. Alberta, you're only subject to house price deflation. You're actually gaining quality in many cases month by month, which in many ways offsets some of that deflation that's ongoing. But everywhere else in Canada, I'm sorry, this is the reality of a housing market. I don't care what your real estate agent tells you. I don't care what your mom and dad tell you. I don't care what your husband and wife tell each other. This is a reality. What your main concern should be is this election. Because you're going to have a new government with 4 years, I guess unless it's a minority government, 4 years of power. Okay? You're going to have an American economy being driven to survive an election next fall in the United States. That is going to put pressure on the Canadian economy. We have political leaders who are not willing to stand up for Canada as a nation. They're more interested in standing up for globalists and interest groups in this country than versus the regular Canadian. Oh, sure, they'll give you a child tax credit benefit and make it sound like they care about you. But when the jobs start to peel away and they're not able to respond to create more jobs, they didn't care about you in the first place because they should have been budgeting for a situation when these jobs are being lost. Interest rates of luckily cannot go up So I think that's what your listeners really another one of the most important things are. It is going to be next to impossible for governments to raise interest rates. Governments, because they want to get reelected, their only recourse is to drop interest rates, which is why you have negative interest rates in other parts of the world. You have them because of politicians. Self-serving politicians whose only goal in life is to get reelected, so that their opinion and their thoughts dominate your society. We need political leaders who simply tell the public the truth. Hey, Canadians, we're going to hold interest rates, the 5-year mortgage rate in Canada, at 3% for the next 12 months. We are then, no matter what else is happening around the world, going to raise those interest rates. We're going to raise them at 1/4 point every 12 months until we get interest rates back up to 5% on a 5-year term mortgage. Deal with it. Start budgeting for it now. Pay down your debt now to offset it, because we're doing this so that 5, 10, 15 years from now, as your kids are looking to buy houses, we're setting them up for success. Because if we only focus on making you happy today so that you'll vote for us tomorrow, we are going to continue to lead our country down a road we may not recover from. It is going to cause society to fall apart in many ways. It's going to allow soothsayers to take opportunities that they normally are not able to take advantage of. And it really risks everything that we have as a nation, our healthcare system even for that matter. So when you're thinking about this fall and you're thinking about buying a house, if you are still focused on buying a home, just remember the price of the house that you're buying, the value of it, is decreasing. If you buy it in September, by the time you close on it in November, it will be worth less money. Whether a realtor tells you that or not, I don't really care. This is a reality. We have not been wrong on House Street with one of our forecasts since we started going live here. That is not going to change. What we're reporting on right now, we recorded 1.5 years to 2 years ago. That's not going to change. It doesn't matter who gets put in power. It doesn't matter what happens in the United States. Barring war or a environmental nuclear explosion, for the sake of the argument, or environmental disaster, this is what's going to happen going forward. The path is laid out. Simply know what the path is. Simply be sure you're making an informed, rational decision about the path that you're going to follow, and be sure that you have a plan. You have a plan that takes into consideration all the majority of the potential outcomes over the next few months. As long as you act that way, as long as you look at what's the most important thing to you, the most important thing to you is your family. Your family is first. Making sure your family is taken care of is first. Always think about that when someone's telling you to buy a house in a correcting housing market.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.